What's up, everybody? This is Investing Sensei here bringing you episode 141 of the portfolio update. So hopefully you guys are doing awesome and you guys are having a great 4th of July weekend. It's pretty awesome with family. But anyways, in this episode, I have a couple things I do want to go over, which the first thing will be actually going over the portfolio, how the portfolio performed this week, and then we'll jump into the activities. I'll show you what I bought, what I sold, any dividends that came in, and then we'll jump into this article that I do want to go over because you know, some of the banks last week passed a stress test and some of them declared dividend raises. I want to go over that. And then guys, we have 4 dividend companies that are expected to raise their dividend the month of July, so definitely look forward to that. That will continue to increase our dividend snowball. Remember that we continue to come back every single month and see this progression go up and up. We are finally in July, so I will be releasing the video for how much we made for the month of June, hopefully Monday or Tuesday of this week. So definitely look forward to it. Make sure that you're subscribed with that bell notification so that you're notified when I upload that video. And while you're down there, be sure to drop a big thumbs up on the video to help out the channel. That is all I ask in return. But after we go over the 4 companies, we will come back, kick off the scripts, see how much we grew that dividend snowball. Because remember guys, that we continue to dollar cost average into the portfolio no matter what the market's doing or what the portfolio is doing. We continue to increase the snowball because remember, right now we're currently projected to make about $3,259.97 for the year. We're projected to make about $271.66 per month. Remember that we do have a goal of 2022 so that we can stay focused. One of those is to make $300 on average per month each quarter. We're getting very close. We need about 29 more dollars to go. And the other thing is to continue to dollar cost average $100 every week no matter what, at the minimum, and then drip our dividends plus add an additional $20, which I'll show you that in a bit once we jump into the activities. But that is what I plan to show you guys in this episode. So let's go ahead and get started because I don't want to make it too long of a video because we do have a lot of content to go over. As you'll see, the portfolio is at $170,497.02. If we look at the buying power, we have about $4.77. That is actually from a dividend, which you'll see in a bit once we jump into the activities. If we look and check out the value over time, we look at the 1 week, guys, you'll see we're down about 2.78%, which is about $4,000, almost $5,000. So pretty much down majority of it. If we look at the month, we're down about 7.22%, which is about $13,000. Been very volatile here. On the quarter, you'll see this here that we're down about 19.2%, which is about almost $40,000. And we just been heading downwards, upwards, downwards, but the trend is downwards. If we look at the 1 year, we're down about 11.13%. It's about 20,000, almost 21,000. So been very volatile here. We've gone up and down, and we're just in the downwards trend, and we love this, right? We're creating this generational wealth right now when we're getting these awesome deals. If we look at the overall, we're still up 46.75%, which is about 48,000. We could potentially even go in the negative overall, but we don't know. We're going to continue to dollar cost average. We're investing for 5, 10, 15, 20 years from now, and we will get some great opportunities at this current moment. If we look here just as a reference, this was the March 2020 crash, and you saw how low it dropped, and from there we've just been going up and up. And so if we look at this current stock price, or I guess the price of the portfolio is at 170,000, that means that we would go back in time to about maybe June 14th of 2021. So last year we would have gotten this great buying opportunity again. It's kind of where we're at. So I'm definitely trying to accumulate more shares, continuing those dividends to reinvest at least cheaper prices because we're accumulating more shares, and that's increasing this dividend snowball, guys. But that covers the value over time, guys. Let's jump over here to the activities so I can show you guys what I bought, what I sold, and then any dividends that came in. So last week was the 27th on the Monday, and that's when it started. So if we scroll all the way down, which is right here, On the 27th, you'll see that we did 2 buys, $93.54, and we actually just reinvested the dividends. So Bank of America and Lockheed Martin, which was actually my best paying month for, well, I guess my best paying stock for that month. That was pretty sweet dividend there. And then if we look at the next one, we got a dividend from United Health Group, $6.76, which is pretty awesome there. The 29th, we did 1 buy, which was we just reinvested back the dividend. And then we actually got some more dividends. So the 30th, we got Pepsi, $7.01, and then Union Pacific, $11.06. So that actually wrapped up the month of June. So that is why we are so excited to see how much we end up making for the month of June. Because remember, guys, that we are trying to beat the previous quarter. We're working on 2022 Q2, and hopefully we make over 781, because we're continuing to drip and reinvest those dividends and continue to dollar cost average. So we want to see this kind of like a staircase go up and up. Right here was a correction because we did readjust our portfolio. We sold out of Verizon, AT&T, which were really high dividend yielding companies. But if you'll see here, we did deposit $180, $100 minimum every single week, and then $80 because we got some companies that paid us a dividend. So on the 30th, we did 6 buys. We bought $20 of Pepsi, United Health Group, Union Pacific, Nvidia, and that is because they paid us a dividend this week. And then we got Starbucks, $50, and then JP Morgan, $50. So I divided the $100 into these 2 companies. I'm pretty happy with that. And then we got the dividend from Nvidia on the 1st of July to start off the month very, very strong with $4.77. Pretty tiny dividend, but hopefully over the long term, these drips will continue to increase this over the long term. And then on the 1st, we did 2 buys, $18.07. We just reinvested the dividends back into themselves, Pepsi and Union Pacific. And that was basically it, guys. Let's see how much we made in dividends this week in passive income. I do have this green button again, guys. It's completely free. It's a script that I wrote. Just check out the description or check out one of my playlists. All I ask in return is that you subscribe with that notification if you have not done so, and you drop a big thumbs up on my videos to help out the channel. But this will add up all the dividends on this page. So click calculate, and we made $29.60 for this week, completely passive. We had to do absolutely nothing. Our portfolio went to work for us, so that was pretty sweet, guys. And that wraps up the activities. So let's go ahead and go to the next one, which is going over the stress test for the banks. So this article was in Seeking Alpha. We got Morgan Stanley, Bank of America raised dividends, JP Morgan dividend unchanged is what the title is, in case you guys wanted to quickly look over it. But the US largest banks announced their capital return plans after Monday's close, after passing the Federal Reserve stress test last week. Among the universal banks, Morgan Stanley will boost its dividend by 11%. Bank of America will raise its Q3 dividend by 5%, and JP Morgan keeps its dividend unchanged. The other one here, we got JP Morgan is keeping its quarterly dividend at $1 per share for Q3 2022 due to higher future capital requirements resulting from the 2022 comprehensive capital analysis and review part of the stress test. Its indicative stress capital buffer increased to 4% from its current 3.2%. And then the next one here, I just wanted to quickly go over. Morgan Stanley will increase its quarterly dividend by 11% to 77 cents per share from the current 70 cents starting in Q3 2022. And it's authorizing a new 20 billion share repurchase program. That is pretty cool. If we look at the Bank of America one, guys, Bank of America will increase its quarterly common stock dividend by 1%. I guess not 1%, but 1 penny to 22 cents per share from its current dividend. The bank's SCB will be increased by 100 basis points above its current 2.5 level. That means the company will have to set aside more of its assets as a buffer to ensure it could handle a severe economic downturn. In October, Bank of America had renewed its 25 billion common stock repurchase stock purchase plan with 17 billion remaining as of March 31st, 2022. So congrats to all the Morgan Stanley and Bank of America shareholders. And now guys, let's go ahead and jump over to the next thing, which is going to be the 4 companies that are expected to raise their dividend in the month of July for doing absolutely nothing, guys. This is why we love dividend growth investing. And the first one on the list is Bank of America. So BAC currently trading about $31.56. If we look over here, 52-week range, they've gone as low as $30.63 to a high of $50.11. If we look at the EPS, they're 3.30, PE 9.57, dividend rates about 84 cents. Dividend yield is 2.66%. Market cap $250 billion. And if we look here at the dividends, if we look at the dividend scorecard, they are in the financial sector, of course, and then you'll see that the dividend summary 2.66%. And I did include actually Bank of America just because it's my dividend growth portfolio, and even though I went over the previous article, just because it's gonna finally pop up into the dividend scripts. If we look at the annual payout, they pay out 84 cents for 1 share that you own for the full year. Payout ratio is 23.14%, so a very low payout ratio. 5-year CAGRs 22.87%, and dividend growth is 1 year. I think this is actually incorrect. Let me know actually how many years they've actually been growing it, if you do know it off the top of your head, in the comment section. Actually, while you're down there as well, be sure that you're subscribed with that bell notification and you drop a big thumbs up on the video, guys. Helps out the channel a lot. But let's go ahead and look at the dividend history. I'll show you right around when we should expect this to show up in the dividend scripts. And if we look at 2021, if we look at Q2, they were paying 18 cents, and then Q3 they raised it to 21 cents. Typically they announced this on July 21st, 2021. We're actually gonna have to look at 2019 because 2020 with the crash and everything, they didn't raise their dividend. On 2019, you'll see that Q2 they were paying 15 cents, and then Q3 they raised it to 18 cents, and that was around July 25th, 2019. So probably closer to towards the end of July is when we should see this show up on Seeking Alpha, which then the dividend script should pick it up. Let's go ahead and jump over to the second one, which is also in my dividend growth portfolio, guys, and that is Duke Energy. DUK currently trading about $109.62. You'll see the 52-week range over here. Lowest they've gone is $95.48 to a high of $116.33. EPS is 5.46, PE 20.09, dividend rate $3.94, dividend yield 3.59%, and then market cap is $82.54 billion. If we look at the dividends and look at the dividend scorecard, this company is in the utility sector, and if we look at the dividend summary, you'll see that dividend yield is 3.59%. Annual payout is $3.94. So for every 1 share you own, you should get about $3.94 every year. Payout ratio is 74.38%. 5-year CAGRs very low at 2.87%, but this is typically expected from most of the utility companies. Dividend growth is 11 years. If we look at the dividend history here, you'll see when would they typically announce the raise. So 2021, we look at Q2, they were paying about 96 cents. Q3 they raised it to 98 cents, and typically they announced this on July 12th, 2021. 2020, if we look at Q2, 94 cents, and then Q3 96 cents, and this they announced it around July 6, 2020. So typically probably in the first 2 weeks of July is when we should expect this raise, so definitely looking forward to that one. Let's go ahead and move on to the third one, which is actually the last company in my dividend growth portfolio. The fourth one is not in my dividend growth portfolio. It's more of a company I included because I think a lot of my subscribers could potentially own it, but let's go ahead and go into the third one, and that that is Skyworks Solutions, SWKS, currently trading about $91.12, guys. Look at the 52-week range. They gone as low as $88.81 to a high of $197.62. If we look at EPS, 11.10, PE 8.21, dividend rates $2.24, and then dividend yield 2.46%, and then the market cap is $14.66 billion on Skyworks Solutions. Let's go over here to the dividend scorecard. These are in the information technology sector. If we look at the dividend summary, dividend yield is 2.46%, and then annual payout $2.24. So for every share you own for the full year, you'll get $2.24 throughout the whole year. They pay out quarterly, so you just divide this by 4, and then that's how much you would get. Payout ratio 20.68%. Which is actually a really low payout ratio, which that means they have a lot of room for growing this dividend over the coming years. 5-year CAGRs, a double-digit CAGRs, 14.87%. So typically, we should hopefully get a raise around this range. Hopefully, dividend growth 8 years. Let me know if this is incorrect. Seeking Alpha is known for this to be incorrect, this value, so this one I don't trust. If we look at the dividend history, guys, and we scroll down, I'll show you. We'll probably want to do like 2020. So Q2, guys, they were paying 44 cents, and then on Q3 they raised it to 50 cents, and this was around July 23rd, 2020. If we look at the 2021, Q2 50 cents, and then Q3 56 cents, and that was around July 29th, 2021. So probably closer to the last week of July is when we should get the raise from Skyworks Solutions, if they are actually going to grow it this coming year. So let's move on to the last one, guys, and that is actually Walgreens Boots Alliance, WBA, currently trading about $38.56. If we look over here for the 52-week range, lowest they've gone is $36.98, up to a high of $55, guys. EPS 5.05, PE 7.64, and then dividend rate $1.91. Yield 4.95%. That is an amazing dividend yield. Well, I guess starting dividend yield. Market cap $32.76 billion. If we look at the dividend scorecard, you'll see that this is actually in the consumer staples sector. And then if we scroll down to the dividend summary, really awesome starting dividend yield, and that is because the stock has gone down in price, 4.95%. Annual payout is $1.91 for every share you own. That's how much you would get paid out in a full year. Payout ratio is 35.37%, very, very low. 5-year CAGR 4.95%, very low as well. And I believe this is actually incorrect. They've been growing their dividend much longer. I believe they're dividend aristocrats or dividend kings. I'm not 100% sure, but let me know in the comment section if you do know at the top off of your head. And yeah, that is WBA. Let's look at the history here. So it'll probably be like a 5% raise potentially on WBA. And if we look at 2020, guys, Q2 45 cents, and then Q3 46 cents, which was actually July 8th, 2020. If we look at 2021, they were paying 46 cents on Q2, and then 47 cents on Q3, and that was July 13th, 2021. So probably first week of July to second week of July is when we should get this dividend raise. Let me know in the comment section if you do own WBA, if you're invested in it. I'm not invested in WBA in my dividend growth portfolio, but I would be interested to see how many of my subscribers are actually invested in this company. But this is actually the 4 companies that I am expecting to get dividend raises from. Let me know if you own any of the 4 companies and you're looking forward to these raises. But let's go ahead and wrap up this video, guys, with actually going to the Google Sheets and seeing how much we grew the dividend Snowball this week. Because remember, no matter what the portfolio is doing, this is going to continue to increase. So by the end of the video, we should always see this every single Sunday get larger and larger. So if we go over here to the dividend payout, guys, let's just go ahead and kick off the dividends if any new companies declared it. So we're gonna go to portfolio tools, get latest dividends, give it a minute or two. And so I do have a tutorial for this script as well. It's completely available for free, guys. All I ask in return is that you support the channel by dropping a big thumbs up on the videos, and that you're subscribed with that notification if you have not done so already. But the script's running. You'll see that American Towers will be getting on the 8th of July. So that one, we're definitely looking forward to that one. Then we got Altria, which Altria has just been getting destroyed on the stock price, and pretty awesome starting dividend yield. They will be paying out on the 11th of July. And then we got Leggett & Platt, Realty Income, and JP Morgan, which should wrap up the month of July, which I'm definitely looking forward to. And then we will start off August, which I think will be a great dividend month, hopefully. And then we will start September, which will be the massive one. Remember, like, we got targets, 20% dividend raise, guys. Pretty exciting there. But if we look at the settings, guys, we're gonna actually delete this, and that is because we're gonna jump over to personal capital so that we can get the latest version of our portfolio holdings, because we did make some purchases this week. So I'll see you guys over there. All right, guys, so we're here at the personal capital. You'll see this green button, click on it. This copies the content of our portfolio with the number of shares and so on. This is a script I wrote again. I do have tutorials for all this stuff. It's free, but we're gonna jump over to the Google Sheets. It's in our clipboard. You can right click, paste values only. Then we can jump over here to holdings, and this is actually technically our portfolio. You'll see it has our shares and the price and so on. So once we click portfolio tools, update portfolio holdings, this page will get wiped, and it'll use the new version that we just pasted, or that string, and it'll parse it. So click on update portfolio holdings. You'll see it get wipes, and it gets recalculating everything. We can jump over here and see everything auto populate. So pretty exciting, seeing this grow every single week. All right, looks like it's done. Dividend yield, guys, is 1.92%, and that is because the portfolio actually went down in price from last week. Yield on cost is still 2.60% yearly. We went up about maybe $8 or so. And then for the month, we're at $272.28 compared to $271.66. So maybe about $28 more, $27 more to go to achieve our goal for 2022. The week, guys, about $62.83. So we went up about 14 cents, and that was pretty sweet. For the day, we went up about 2 pennies. Hourly, we're still at making 37 cents every single hour. And then the hourly work wage, this is if our portfolio was to go work a 40-hour work week, they would get paid an hourly rate of $1.57. Long term, we want to try to get this to minimum wage. I think that would be pretty awesome. But yeah, guys, this is actually all I have for you guys. If you stuck all the way to the very end, be sure to drop a hashtag raises, because we are getting some we're expecting some pretty sweet raises this month. Let me know in the comment section if you own any of these 4 companies, and yeah, it'll be very exciting. Again, don't forget to subscribe with that notification if you have not done so already, and drop a big thumbs up on the video to help out the channel. I will catch you guys in the next video. Take care, stay safe out there. Bye, guys.